Welcome, ladies and gentlemen, to the second edition of the Pulse of Governance podcast. I'm Subodh Mishra, Director of Communications at Institutional Shareholder Services, and I am very pleased to be joined today by Cristiano Guerra, who is Head of Special Situations Research at ISS. Cristiano, welcome to the podcast.
Thanks, Subodh. Good to talk to you.
And good to have you. Certainly I hope you're holding up well in light of COVID-19. And I think my first question for you really has to do with any change to your routine and that of your team at all by working remotely. What sort of impacts have you had, if any?
Well, thanks, Subodh. I think the commute certainly has been a lot better, but we missed the camaraderie. But the transition was pretty seamless. We are accustomed to working from home, and particularly when we're dealing with pretty involved situations. So the team is up and running, has been for over a month now, and handling things just as we do from the office. The main thing that's changed, particularly when we look at very involved, contentious situations, is our inability to have face-to-face meetings with both sides. But we are also accustomed to doing these calls over the phone. There are situations in which either party prefers to do so rather than travel all the way with all their nominees to see us. So in those situations, we handle these things over the phone. So not much of a change, and we're very grateful to continue to work and to still have plenty to do.
Good. Well, good to hear that. In regards to the pandemic's effects, I'm pretty sure that we're not going to be, seeing them in weeks and months to come, given 2020 AGM filing deadlines. Despite that, though, how is it reshaping the landscape for contested activity?
Mm-hmm. Well, the headline has been for a while that there will be fewer contests and others have settled. The two sides have either reached a compromise or the activist has walked away. There are a lot of reasons for that. Some of them is that companies have a legitimate excuse to some degree that they are dealing with a crisis. So there are certain situations where activists may be looking for sort of changes around the edges. Now may not be the right time as management teams are dealing with a fairly existential crisis in certain businesses. On other situations, there are some activist theses that are probably not as compelling now as they were a couple months ago. For instance, if an activist is looking for increased buybacks or increased dividend, that may not be something that will resonate with institutional investors as much as it might have before. The other concern for activists is that there also may not be as much upside now in the stock as there might have been previously. There are some sectors in particular that have been really hard hit by the crisis, so it really changes the entire approach. But this decline in overall contest is, from our end, somewhat anecdotal at this point, because when you look at last year in 2019, through May, we had seen 6 proxy contests go to a vote, which is the same as we've seen so far this year. The difference really will be in the months ahead. Last year, there were 7 contests that we wrote on that went to a vote in June. This year, there are only 2 or 3 lined up for June, and we'll see if those continue to hold up. The next one on our docket is Starboard going after GCP. We also have Driver Management looking for change at First United Corporation, and Privet looking for changes at Synalloy. What's interesting about those 3 contests coming up is that 2 of them, the GCP situation and the Synalloy situation, are contests for board control, which is a theme that we've seen already this year. So this will be we've already opined on 3 contests for board control this year, including very recently USA Technologies and HC2. So we're seeing less contests, but still very meaningful contests, particularly these contests looking for board control. One of the things that's also become very apparent is that nobody knows when the recovery will really happen in full, but when it does, it could mean a very big year for activism. So I'm looking for a 2021 season that will be very busy.
Gotcha. Next year will be big. So in regards to what you're seeing now, and particularly with respect to 13D filings, are you finding that, activists have kind of gone on a buying spree? What's the status there?
The monthly pipeline report that the SSR team puts together is the most recent one was about 100 pages long, so there's still plenty of contentious activity going on. With that said, it's unclear whether activists are simply increasing positions that they previously had or really building new ones, but you see some of that as well. Certainly the decline in a lot of stocks has created a pretty appetizing entry point for a number of activists, which of course is prompting a lot of companies, as you've seen and a lot of our clients have seen, to adopt short-term poison pills.
Yeah, definitely. I mean, certainly there's been a whole lot of discussion about pills in recent weeks. And so, sticking on that topic, what is the view, if you will, from longtime activists over the, proliferation of pills that we've seen over the past month or so?
Look, these poison pills, they're not going to prevent an activist campaign where the fund really believes that there is significant upside that can be brought about by a campaign. By limiting an activist to 10%, 15%, you certainly might reduce a little bit of the leverage that they have. But nowadays, any fund looking to run an activist campaign is going to have to gain the support of large institutional investors in order to be successful. So putting in a poison pill, it may limit them somewhat in what they can do, and particularly the kind of leverage that they would have in negotiations at the start. But it also allows the activists to point to these pills as yet another piece of evidence of entrenchment. So it cuts both ways. The one thing for companies really contemplating whether to put a pill in place, the best defense really is a good offense, and that is demonstrating that the board and the management team are handling the crisis as well as possible, and that they are coming up with a compelling plan for how they will eventually come out of the crisis.
Sure, it certainly makes sense. So getting to the work that you do, I mean, how might your analysis and recommendations change given the current climate?
We primarily are going to try to stay consistent with the framework that we have in place. At the same time, we have to be mindful that there are some severe challenges that certain boards and companies are facing. I think that that's reflected in the guidance that particularly the benchmark team put out on poison pills recently. I think it demonstrates ISS's overall reasonableness in terms of looking at these situations. And that's something that will guide the way we look at the SSR team looks at contentious situations as well. But we also have to be aware that there will be companies that may be hiding behind the impact of the crisis and putting in defense mechanisms that may not be necessarily shareholder friendly.
Okay. And last question for you, Cristiano. I'm wondering about M&A activity. What are you seeing there?
M&A activity certainly is way down. I think the year started off, interestingly enough, with a number of buyers struggling to get their deals approved. So you had Occidental Petroleum went out and got very expensive financing from Warren Buffett in order to acquire Anadarko and circumvent the shareholder vote for that deal. You also had Instructure, where Thoma Bravo, the PE firm, had to flip its offer to a tender once it realized that it probably wouldn't be able to secure the shareholder vote to take Instructure private. And a third example was Pattern Energy, where shareholders of that company were initially very unhappy with Canada Pension Plan Investment Board's offer for their renewable power producer because of the rising valuations in the ESG space. The pandemic, of course, softened some of that opposition. That sort of storyline has flipped on its head, where you had the remorse from potential targets that perhaps didn't move fast enough on deals. Now you're seeing acquirers that perhaps wish that they hadn't. And the uncertainty that you're seeing in deals now it's certainly affecting how certain M&A situations are playing out. We see several targets continuing to trade below the cash offer price due to the uncertainty.
Interesting. You bringing up those examples, it seemed like years ago, not months ago. I guess a pandemic will do that to you. But Cristiano, again, thank you for joining us today and the insight. Certainly appreciate it.
Good to talk to you, Subodh. Take care.
Thank you. And to our listeners, be sure to tune in for the next episode of The Pulse of Governance, where we'll be discussing securities class actions. Goodbye for now.